The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you for being with us today. I think it's still morning down in, it's certainly morning in Queensland. We have various whacks of daylight saving around Australia. And joyously in Queensland, the state that needs daylight saving more than any other, we don't have daylight saving. So yes, it's still morning. Good afternoon to the rest of Australia, and good afternoon to our friends in New Zealand. Great to have you all with us, folks. How's the volume? Can you hear me? Somebody type in the question box and tell me how the volume is. You hearing me all right? 1, 2, 3. Good. Janet, hello, darling. How's your ankle? You feeling better? Thanks, Adrian. Nice to see you with us. Johnny Barnes up there in Canada. Make America great again. Good to have you with us. Oh dear, poor old Janet's had a bad time. She slipped over. That's what happens when you live in Canada and the bloody ice and the snow and everything else, and broke her ankle in a bad way. Great client and friend of mine, Janet. She's done about three tutorials. Your trading should be pretty good, Janet. We need to talk to all of you people doing the tutorials recently, and I haven't done much with you for the last couple of weeks. I've had a lot of work going on here. We've had tilers and bathroom people and generally total disruption. So I'll be catching up with all of you next week. So great to have you with us. Thank you. Okay, let's see what's happening here. Who have we got? Tom T from Florida. Hello, Tom, Adrian, Alan, my mate in Brisbane. Albert, good to have you with us, Albert. Z, Alex. Alice, lovely to have you. Always have a special hello for the ladies. We don't have many of them. Bernard Stricker up there in Costa Rica. Haven't seen you in years, my friend. Brian Baird up at Wee War, up at the Darling Downs there. Chase, nice to have you with us, Chase. Lots of Daniels, Davids, Franklin Bitch, nice to have you with us, Franklin. Chip Stevenson. Chip, I hope you're well. Your mate as well, rugby players. Janet Christopherson, hello Janet, good to have you. Janet Rivette, nice to have you with us. Who else have we got here? Lots of Johns, Johnny Barnes amongst others, and Mark, nice to have you with us. Marshall, Matthew also. Matthew down in Melbourne, my mate. God, the voices from the past, Matthew. I tried to call you the other day on Skype, mate. I'll give you a call later over the weekend, perhaps, or next week. Marilyn, welcome. Mike Mitsos, our super gun trader up in Chicago. I hope you're still raking in that money. Mike, the other Mike Murphy, he's a tutorial guy. He's going to be chasing it all up. Norbert's in the middle of doing a tutorial there, Norbert, over in Portland. Good to have you with us. Philip, Pierre, yes, nice to have you with us. Okay, Randy, God, one of our oldest clients. Randy was a great bush pilot, Randy. He was flying crates of oil, drums of oil on one of these, bush plane runs. A very brave man, Randy. Good to have you with us, old fella. Rose, lovely to have you with us, Rose. Lots of others. Scott, yes, nice, Scott, to have you with us. A couple of Scots. Okay, and Tom T down in Florida there. Tim Helbert. Tim, you're a broker up on the in the New England Highlands around Armidale, I think, from memory. Haven't heard from you for a long time. Good to have you with us. Toddy Timmons, my mate from south of San Francisco, around there somewhere. Good to have you with us, Toddy. Hope the family's well. Tony D up in Chicago. Good to have you here. You're welcome to Coal Chicago, Tony D. Quite right, mate. And Trevor, yeah, got lots of our old friends here. Lovely to have you all with us. Okay. Well, you can see the screen, folks. See if I pressed all the right buttons. We're recording. That's good. Sounds good. Is the party over? What a question, eh? Amazing, isn't it? The power of suggestion. I told you folks at one of our webinars, month, maybe longer, some time ago, at least a month. I suspect it's probably longer, that our next target on the long-term charts was 2,400. Actually, some points under that, but not far. And I think we said 2,400. And that was fun. And then nothing much happened from that, and except I hope you all took note of it. And then a week later, Goldman Sachs came out and said they had a new target for the S&P, 2,400. And of course, after the vampire squid had spoken, the rest of the investing community rushed to jump out and say, yes, it's 2,400. The consensus of investors went to 2,400. So you heard it first here, but now we've got to work out what does that actually mean. That was a target. We've reached that target. Where do we go from here? There's nothing to say that's the final target. But we need to look at the evidence on that. And it's really interesting what's happening in markets and the world generally. Let's move on here, make sure that the screen's changing for you. Yeah, markets are rational, orderly, and sometimes predictable. As we know, we try to prove that to you every day here at the Daniel Code. I'm going to talk to you today about, you've heard of peak oil and peak this and peak that. Well, I want to talk to you today about peak stupidity, which I think is going on in US equities and also in the world at large. And I wanted to introduce you, for those of you who don't know, my guess is most of you won't, to a gentleman who's been dead many, many years now. His name was Sir Robert Menzies. He was a wonderful character, founder of the Liberal Party in Australia. Now, just to confuse you, the two big parties in Australia, Liberals and Labor, well, Liberals are not liberal. Liberals are conservative in American terms. They're the equivalent of a bit of the Republicans, and Labor, of course, it's the, as you'd expect, it's the party of the trade unions. But Menzies is a historic figure in Australia. He was Prime Minister for 18 years, including the post, around the period of the war, World War II. A great thinker. He was a lawyer, an orator, wonderful man, and he had some things that have been, some thoughts that have been forgotten over the years. And I just wanted to run through a few of these with you to set a standard and show you that, in these days of rapid change, the reality is that no matter how fast change goes, the basics remain the same. In 1942, Menzies said, governments do not provide enterprise, they provide controls. And I think that's the most important statement that I've read from Menzies. It's certainly one that resonates with me. Governments are notoriously bad at almost everything. And the fact that we allow them to have access to between 19 and 28% of our country's GDP. That's a sort of range in the Western world between the US at about 19 and Australia, which admits to 24, 25. It's actually closer to 30. It's about 28% of GDP. We then allow government to spend our money, and the reality is they don't spend it very well. What Menzies said is governments do not provide enterprise being an old-fashioned word for business, for profitability, for creating opportunity. Governments provide controls. There cannot be rising living standards if all we propose to do is redistribute what we now have. We must produce more and produce it more cheaply. He then went on to show that even though he was a man of the right, he had a very early developed social conscience. Remember, this is in the war years. The country has great and imperative obligations to the weak, the sick, the unfortunate. And I believe that, even though my politics are, as some of you know, I would say slightly to the right of Genghis Khan. I don't want to say I'm a compassionate conservative, but I certainly believe that there are people who genuinely need the community's support and help. Menzies was telling us this back in the 40s. His next point I thought was very relevant today, given what's going on with the media and the apparent hate that's going on in the American political system. He said it was a simple but sometimes forgotten truth that the greatest enemy to present joy and high hopes is the cultivation of retrospective bitterness. And I think that's what you're seeing from a great deal of the left wing of the political movement in America, and also the media that's aligned with that particular group. The cultivation of retrospective bitterness doesn't serve any purpose except to destroy the possibilities of present joy and high hopes. And his final comment, this is a guy who's, a right-wing conservative and pro-business. A man may be tough, concentrated, successful moneymaker and never contribute to his country anything more than a horrible example. I thought it's worth just, highlighting that to you in this age where we have public adoration of the super wealthy. And we don't pay much regard to the social consequences of accumulating that wealth. I mean, wealth creation is a wonderful thing. I'm all in favour of it, and I'd like to have as much of it as I can get. But sometimes this adoration of people simply for their ability to create large amounts of corporate wealth, often through situations where they have a business that has substantial barriers to entry, often propped up by governments. I think it's worth just making the point that that's not the be-all and end-all of life. You'll find as you get older, folks, I won't say you're going to become a socialist, but your views will mellow. The main theme of this, what I'm really feeling about markets and life and media is I'm thinking we must be very close to peak stupidity. And Michael Pell, who sometimes lives in, we don't quite know where Mike lives. Sometimes he's in Western Australia. Sometimes he's around the Panama Canal zone. But he's a real right-wing conservative. A bit of a conspiracy type of guy, but who's to say these things aren't right? But honestly, he's highlighted to me the stupidity that's going on, not only in markets, but equities I'm talking about, but in our lives. I don't know, maybe peak stupidity is giving the world too much credit. Maybe there's no such thing as peak stupidity. Maybe the world just goes on getting more and more stupid. But, Snapchat today made its debut on the New York Stock Exchange and came in at 2.5 times valuation. I don't know. This is a company that lost 500 or 600 million last year. It's 5 years old, and they're paying. I don't know what the multiple is, but it's in la la land, to coin a phrase. Even if it didn't win the Oscars, this could be, if there's going to be a peak stupidity in the text, this could be it. Pivotal, who's one of the really well acknowledged assessors of public company offerings, came out after the float at about $24, $25 it went off at, and said our target's $10, and that's being about as charitable as we can be. So it seems to me that it's up there in the realm of peak stupidity. I talked to you before. I love this expression of Sarah Palin's, the hopey changey thing that Obama was promising the world. He changed it all right. He almost doubled the national debt in the US in 2 terms. Quite extraordinary. 8.8, almost 9 billion trillion. With a T, dollars of national debt added, and the world still, or the media at least, large parts of it still view him as a wonderful character. I don't know just how that peak stupidity works in there. But what's happened is that this hopey changey thing has now morphed to markets. And what we're seeing in the equities is this total disconnect between soft data and hard data. And by soft data, I mean the hope that the things Trump's talking about, massive tax cuts, perhaps as low as 15% corporate tax, elimination of regulations, trade barriers, all of these things, but particularly corporate tax. That's the soft data, and on the basis that any of those things, or all of them really, I think the markets are getting pretty close to being priced to perfection. On the basis that those things all happen, and happen in a timely manner, that gives these extraordinary valuations that we're seeing in US equity markets. Now, the hard data is not supporting that. There's no evidence yet, of course, that these earnings are going to happen because the changes Trump's talking about haven't been legislated. I mean, they're great ideas if they can be paid for. They're great ideas if they even come to fruition. As I've told you before, politicians are arrogant, proud characters. They have their own agendas that they believe in, and the question is, can these initiatives, wonderful as they sound, A, can they be enacted? B, can they be paid for? And there's some big question marks over that, and the hard data is just not supporting current valuations in US equities. Now, you don't have to get too worried about this if you're a trader, because we don't really care. Remember that the markets are going to pay you just as much money going down as they pay you going up. The only difference is that the old saying, markets tend to go up by the stairs and down by the elevator. Once markets get into a downward trajectory, they tend to go down faster and harder. So you don't have to be concerned about that. Investors do, because investors, by and large, don't have a market pulse. I've told you the story before of a client of ours who's a account manager at a branch of Wells Fargo, managing a lot of money for clients. And during the 2007-2009 crash in equities, he was in contact with me constantly, and he was so thrilled that at the March low, those of you who've been with us long enough, we had all the buy signals in the world for the March 2009 low. We even gave the number 666, the number of the beast, and you can read about that. It's in if you go to the Daniel Coat website, click on articles, you'll find an article called The Number of the Beast, which tells you a story about what was happening at the lows, the crash lows of 2009. But our friend was so happy. He said, "Oh, I'm so thrilled. My clients held on, and we're so relieved that the bottom's come." Well, you may well be relieved, but that's a stupid strategy, because that was just a target. It's like our 2400 target. It's just another target. It happened to be 666 was the low, and it also the number of the beast, which was kind of interesting. But it doesn't. There's no hard stop on markets. We can have targets. We can have all the reasons in the world that they're overvalued. We can have all the reasons in the world we should get a bottom. That, as W.D. Gann used to say, the markets can stay overbought a lot longer than you can stay solvent, which is always a warning to premature bears. So investors have these problems. I mean, if a major bank, and I mean all the major money market, the money traders were doing the same thing, if they can sit through that 2007 to 2009 pullback and think that's smart investing for which they're getting paid a fee, honestly, it's La La Land. And I don't mean the movie. It's just, that's not smart. The money that was made in the pullback, if you're a trader, if you're with the Daniel Code, you knew when the sell was. You got every signal all the way down, including a few little nice counter trend rallies. And we had buy signals exactly at the low to the day, and a handful of ticks. So as a trader, you don't have to be concerned about any of these issues, because our trading has no fundamentals in it. We trade on price, but more and more, for those of you who've done tutorials lately, will know we're trading on time. We have a set of proprietary time signals that are quite extraordinary. you'll get the signals. If you follow the Daniel Code signals, you'll be in the market the right way. But boy, oh boy, I'll tell you, if there's a decent correction now, and I mean a correction of 50% is not out of the question. I think it'll take a lot of time. I'm not entirely sure that we're at the top yet, but as I've said in the invitation to you, this webinar, it's getting pretty late in the party. We've been having a great party. The bull market's been going for 8 years. We've had plenty of drinks, a bit of dancing, who knows, maybe even some fireworks. But it's certainly time to be thinking about saying your goodbyes and who you're going home with tonight, if you're lucky enough to have that choice. So, yeah, are we in a place of peak stupidity? I mean, what stopped the big dot-com rally into 2000? Peak stupidity. But, you could have had, even you had Greenspan talking about irrational markets half a year before it ever got to the peak. So there's nothing to say that this is the high, but it certainly reached a major target, and markets and the community values are showing peak stupidity, in my view. It may not be the peak, it might only be a peak. Maybe the world is capable of even more stupidity, which we've yet to see. But these are certainly warning signs that I don't think this can go on a great deal longer. So one of the issues that you read about all the time is this issue of fiat money. And fiat money is basically, I like to call it unsound money, and it's usually used in context with promoting gold. The people, the gold bugs, I'm sure we've got a few with us here. Let me have a look at our list of attendees. I want to see where's our super gold bug from Reading? Are you here, mate? Let's have a look. Gosh, I've got so many people here. It's going to take me a moment to go through this. Wow. Akshay, late arrival. Nice to have you with us. Alan Keane, good to have you. Yay, gold. Yeah, gets the Make America Great guy. Let me see. We have a number of gold bugs. We actually have a large number of gold bugs on this website, David. Webby, nice to have you with us, the king of the black lines. Fatima, lovely to have you. I got your email, darling. Nice to have you with us. This is going to take too long to go through, but the people who are promoting gold are always writing about fiat money, and it's put in the sense that real money is either gold or currency backed by gold, that is, i.e. the old gold standard back in the pre-Nixon days. So a lot of what they say about fiat money is true. There's no easily identifiable backing for our form of currency, which is fiat money. That is, it's not tied to the gold standard. And, when it was tied to the gold standard, the test, although it was very hard to justify it all, was, how much gold does a country have? And its currency is backed by that gold. Well, of course, now it's not backed by gold. It's backed by the full faith of the government, which who knows what that's worth. There's certainly no way of quantifying that. You'll remember in America when the debt got to 8 trillion, that was unsustainable. Then 10 trillion, that was unsustainable. Obama whacked on another 9 trillion. Certainly the media is not interested in, with a national debt heading to 20 trillion. They certainly weren't interested at the time. Should be the debt of the corruption of treason. I suspect it might be the pedophilia that will trigger a big reversal. That's Michael. That's our conspiracy man, Michael. Yeah. Interesting article you sent me. I enjoyed it, mate. I'm not quite sure what that post I've just read out from you is about, but anyway, great to have you with us, mate. We need a healthy dose of skepticism about all things if we're to keep avoiding the fake news as much as we can. But the biggest thing about fiat money is it's allowed governments to issue almost unlimited amounts of money. The central banks just create money virtually out of thin air. And if you think about what would gold have to be worth today in terms of the dollars, the pesos, the euros, the pounds that have been issued. The numbers absolutely staggering. One of the problems is debt is a big problem, but the surplus liquidity is absolutely startling. If you think about the fact that the average home, the average, I mean, average doesn't get you much, does it? Whenever I look at something average, it's pretty lousy. The average house in Sydney, which is a big city in Australia, is now over $1 million. And that's a long way away from the city, I'll tell you. You look at it and you just think, you're kidding. And we went through this in the big 2007 US property boom. Shacks were bringing 400,000 or 500,000. And commonplace in Australia, Sydney and Melbourne in particular, properties selling 6, 7, 800,000 over reserve, 1, 2, 3 million over reserve. I don't know where they get the money from, but it's there. A lot of it's coming out of China, a lot of other reasons as well, which is not what we're here to talk about, but really all contributes to this idea that we must be heading towards peak stupidity. When you're focusing on information, folks, because, I guess if you're like me, you're hungry for knowledge, you're hungry for news, always define the author's motive before assessing the argument. This fiat gold argument is one of my bugbears, fiat currency versus gold. The people who are constantly pushing that narrative, and it goes on all the time, are people who are trying to sell gold bullion. Now, you can't buy gold bullion at the latest London fix unless you're a registered trader with the London cartel, and you certainly can't buy or sell it at the latest COMEX fix. The people who are pushing that narrative are doing it for a reason. They're trying to encourage you to buy bullion, not pay. This is why there's always this huge attack by the gold industry on futures markets that they call paper gold. It's not real gold. Well, really, from a financial point of view, folks, it's exactly the same and a lot easier to deal with now. I know that'll cause a ruckus from our gold friends who say it's not real gold, but we use it as a trading issue. Main thing I want to get across to you, because we have so much fake news these days, define the author's motive before assessing the argument. Once you define the author's motive, you'll get a pretty good idea about why they're pushing that view. We move on to our next page, which I've called More Peak Stupidity. I give you the example of the Bernie phenomenon. I call it Bernie and the Chocolate Factory. This is, the Burn in America, Bernie Sanders running against Hillary for the Democratic nomination for the presidential election. I call it Bernie and the Chocolate Factory because to understand the enthusiasm and joy, particularly by young people for Bernie, listen to what he's saying. The first thing he started off with is free university, free higher education, and we'll forgive all your debts. $8 billion worth of student debt. We'll wipe it, says Bernie. Okay, this is the chocolate factory stuff. Today, latest story, Planned Parenthood. There's a row going on about, the US has decided to stop funding Planned Parenthood type operations internationally around the world. And good question from me, why are US taxpayers' funds being used to pay for reproductive health issues, largely abortions, in foreign countries? Big question from me, why was the Australian government giving $88 million to the Clinton Foundation? I mean, Australia's the most bureaucratic, top-heavy bureaucracy in the world. We have hundreds, probably thousands of people in foreign affairs and embassies all around the world. What is it that a government couldn't do that they wanted Clinton Foundation to do? Well, a lot of it was, they call it health issues, reproductive health. That's a pseudonym for abortion. The stupidity goes on. Celebrity and stupidity, in my view, are becoming almost synonymous. Funny article a couple of days ago with Bruce Jenner, who my children tell me we must now call Caitlyn, and the transgender bathrooms. And Bruce is rabbiting on that Trump has cut down on these transgender bathrooms. And I mean, honestly, and he's yelling out to the president on his Snapchat or whatever the hell they use, "Call me, Donald, call me." I mean, I just can't imagine a whole lot of women are terribly excited about Bruce with his male appendages still intact, wandering around with all dangling in a lady's bathroom. I mean, to me, this stuff is just such total and utter rubbish that, okay, if there's a element there that's unfair to, if you've got to make other arrangements, I don't know what they are, but it seems stupid to me when the 0.001% are running the show. This is the old saying, the monkeys have got loose and they're running the zoo. These are not the people you want running anything. But celebrity and stupidity, in my view, have become synonymous. Liberalism, this is the big issue, isn't it? At the extreme means being offended by nothing. No boundaries, fine. Unlimited immigration everywhere. We have this issue, not just talking about America, we have this issue in Canada, Australia, England, Europe, everywhere. Liberalism at the extreme means being offended by nothing. There are no boundaries, and therefore there are no values. Personal responsibility is the opposite of liberalism. Okay, I don't have a moral view about Planned Parenthood. In Australia, abortion's widespread. It's government funded. Government childcare has just been a huge disaster here, with hundreds and hundreds of millions of dollars being wasted by an incompetent and biased government. Some of the people that have been approved for childcare would make your hair stand on end, and they get government approval because they're minorities, and not very attractive minorities. And then, oh, big surprise, they've ripped off $2 or $3 million. Ridiculous. And in my view, if you want health services, reproductive services, childcare, that's fine, but you pay for it. Okay, my question, I've raised my family, I've raised my children and my nieces and nephews and paid for everything. I've never had a penny from government at all, ever. Why am I paying through my taxes for child caring for someone else's child? Why am I paying through my taxes for someone else's abortion? I don't get it. I don't put any value judgment on my view. But what I do say is, you pay for it. Why do I, as a taxpayer, have to pay for it? And they're just the thin edge of the wedge. It goes on and on and on, Hank. Noisy minorities have been around since we were kids, mate. Yes, they have, Hank, but we didn't hand out the lovely lolly to fools and stupid fringe causes like we're doing now. In this country, this is Australia, we're pretending to have a conservative government that's led by a liberal. Don't get confused. The Liberal Party is the Conservative Party of Australia. Anyway, it's, my view, ridiculous. Pensions, another issue you keep an eye on. You all probably know what's been happening with the Dallas police pensions. Not enough money there. A lot of others the same. A huge healthcare fund went into liquidation today. I forget what it was called. Was it called Philly something or other? And, you know, if you keep assuming actuarial assumptions of 7.5% and 8% per year returns and you're not getting it, the answer is you're going to go broke. And they haven't been getting it for a very, very long time. And on top of this, by trying to be more relevant to their clients, as they assume, large health insurers are trying to curry favor with their clients. This one should make you laugh at the bottom. This is Bupa. This is probably the biggest health insurer in Australia. I got a note from today. You will no longer be able to claim benefits for selected Living Well services. That's what they call it, Living Well. And they included gym membership, kids swimming programs, yoga and Pilates. Why in God's name am I paying for someone else's gym, someone else's kids swimming programs, yoga and Pilates? I mean, insurance is the same thing as what happens with your tax. If these services are being offered to everyone else in the fund, my premiums are going to make payments to them. Right? I don't know if you follow the logic of that, but that's how it works. Absolute peak stupidity. I'm really in the mood about it all now. This is a page you've seen a month or so ago, folks, and more than a month, right? In early of January, I think this might have been the first webinar of the new year. And I talked about the sort of things that I was looking to happen in 2017. A cool, as in temperature war between Trump and the Republicans will break out. Watch for this. I mean, the idea of repealing and replacing Obamacare, the voting mechanism seems simple, but boy, it's hard. The mechanism of creating huge fundings for the military expenditure that's required in Australia and Australia in the States by Trump for 47 billion, and Australia and Europe and these NATO countries. The mechanism seems simple, but getting there, the economics of getting there are difficult. And this soft data versus hard data, a huge part of that is a feel-good element about Trump and the plans that he has for business and the economy. But for them to mean anything, it's got to be executed, and execution can be a problem. And I think as we move through time, I heard one of your legislators say last week in the States, we have to get all this stuff done in 200 days or it's not going to get done. I think that's right. I think that a whole lot of this soft data is running on the basis of Trump's popularity. Certainly in the business community, in the investment community, when that starts to wane, it's going to be harder and harder to get things done. I just want you to have a look at the bottom point here that I've made. Since Obama took office, the national debt's increased by 7.4 trillion. This was written in January 2015. On January 20th, 2009, it stood at 10.6 trillion. On Monday, January the 7th, 2015, it was 18 trillion. It's now close to 20 trillion. Obama put 8.9 trillion on the national debt, and nobody said boo. I mean, it's extraordinary. It's really extraordinary. The media are either blind, corrupt, or totally ignorant. And folks, the same thing's happening in Australia. Okay, this is China and the 9-dash line. I talked to you about this a month or so ago. I want you to just keep it in mind. That red line there, which as you can see runs through the coastal waters of Vietnam, Malaysia, Brunei, Indonesia, the Philippines. That's the 9-dash line that China claims as their sovereign territory, and they claim that they got that at an agreement at the end of World War II. Okay? And that's what this fortification and building of these small islands around the Spratlys and the Parcels and Scarborough Shoal, what they're all about. China has been taking very small reefs, in some cases not much more than a few rocks, and expanding them into man-made islands, and they're claiming this as their exclusive economic territory. This is going to be a problem sooner or later, and it's best you're aware of it, so you at least know what they're talking about there. This next chart, which will change for you shortly, folks, this is T-bonds. Just let me get that up on the other chart so I can give you these dates intelligently. We had a contract rollover in here as well, which is not shown, but this market rolled to the new contract, the June contract on February the 27th. And let's have a look here. Here we are. On the big bar up, you can see that's February the 24th. We had a hook trade. This is a Daniel Code hook trade. Those of you who've been doing tutorials lately, have a look at this, remember, about the hook trade. Sometimes this is a beauty because it can appear without any other signals being apparent. This was also a time sell signal, which you'll be aware of. But look at what's happening with the numbers. You see this market topped out 152.07 was the blue line. That came from the old high where the close back in February the 8th was 152.06. Then you got the retest of that line on February the 24th. That sets up the hook trade. Inside bar, carry forward the sell signal, which was also a time sell signal, and down it goes. Have a look at that for a marvelous trade. It was pretty simple to get, and I think at the moment that trade is it's worth a couple of $1,000 to today's close. But have a look where these markets have run to. Have a look how accurate they are at these numbers. Okay, here's this. Here's the low. See the cursor here. This is Wednesday, March the 1st. That low is 149.07 against the low, the red line of 149.09. Today's low in T-bonds, folks, 148.23. The black line, the Daniel Code, famous black line, Webby always says, 148.23. One of the unique things about the Daniel Code is it measures all markets with numbers, both close to and further away. The members' charts, which are published twice weekly, give you these numbers. Johnny Litzman down in Coffs, I'm pleased to say I took all of that T-bond trade. Good on you, mate. What a beauty, eh? Yeah, nice trading. John's just done a tutorial a few months ago, and doing very, very well. Wonderful trading, John. But if you don't have the Daniel Code numbers, I honestly don't know how you trade. I say this occasionally. I don't get much feedback out of it, but those of you who are trading without knowing what the Daniel Code numbers are, they are extraordinarily accurate, quite extraordinary. And if you haven't got them already, I invite you to have a free trial of the Daniel Code. Just go to the website, click on the free trial banner, follow the prompts. Anything you're not comfortable with or unsure of, email support@thedanielcode.com. And that'll go to Terry at our Canadian office, and he'll be happy to help you. Okay, let's move on. I want to make that point to you. Here's silver, folks. Here's another thing about the numbers. Have a look at silver. We looked at this longer term trade. It came off that black line at 21.24, almost exactly to the tick. Went down. This is a 6-day chart, incidentally. I mean, this accuracy of these numbers on all time frames is quite extraordinary. 1558 was the low. It stopped a point or two above that, and now it's rallied back up to the old numbers. Have a look at this, though, for a study in execution. Execution is vital. I've been talking to you about how execution in government is going to be vital for the US economy. It's going to be vital that the government can actually execute on these promises and ideas. Here's a big trade in silver this week, 2,450 per one contract. Pretty nice. And let me run you through that because it's not quite as simple as it seems. So what happens here is that at the high, which is 0227, right here, it's got the sign on it saying TO3 sell on that day, valid for that day and the next day. TO3 signals are valid for 2 days, including the day of posting. The next day returned an inside bar. That's the bar in red. Then when we have an inside bar, we treat that as a null or a void. Inside bars are market mechanisms. All these markets have their own internal time frame. And what happens when the market gets too far ahead of its inbuilt time frame, markets start putting inside bars. It's like marching on the spot or running on the spot. It's activity with no movement. Or no momentum at least. So when we have an inside bar from a trading point of view, we treat it as a null or a void, and we carry forward the last valid signal the next day. And the next day came on a Wednesday, 0301. And that's the bar that's got this is a DC hook trade sell on it. But that bar, if you look at the low of that bar, the low of the inside bar was 1828, and the low of the bar the next day on March the 1st was 1827. In other words, the trade was elected on the chart. Now, we didn't get filled because we use a 2-tick buffer to get filled. And in some cases, for those of you who are new to trading, I recommend to you that you don't trade the highs or lows of inside bars, that you trade the highs and lows of the last bar before the inside bar that was not itself an inside bar. For you tutorial guys who are all trading the highs and lows of inside bars as you get more experience, that trade, this is the last up bar before today's sell-off, that's Wednesday this week, that's the bar that says this is a DC hook trade. Have a look at that, a perfect setup hook trade. But the sell had already been elected 1 tick below the inside bar. So the market had elected the trade, but we're not filled because of our rule about the buffer. Okay? Which meant if you observe that, you had to sell it the next day, which was today. And it's worth $2,400 per one contract. So execution is vital. This is the sort of thing I suspect we need to talk a lot more about. If you have any questions about trade execution or these little trades, you know, a lot of people have missed this trade. It's a very valuable trade. Shoot me an email. I'm happy to talk a lot more about it. But execution is vital. And that's why that TO3 signal actually was elected by the chart, but you needed to be aware of the processes. The next clue you could have had, this is gold, folks, and at the high here, 1263 was our Daniel code blue line there, and the high went to 1264.9, 1.6 through the blue line, had a heart attack and reversed the huge key reversal bar at Daniel code resistance. That trade was elected the next day. Now gold and silver and the Huey. The Huey is an index. It's the index of unhedged gold producers. You can't trade it with futures. You can trade it with options. But all of those three markets are so highly correlated that a signal in one can be executed in any other if it is elected. So this is what gold did. We had a TO3 and a blue line sell signal. The day of the high, down it went, down it went. Look how it's been tracking the Daniel code numbers down. On Wednesday, which is this bar, here was your low, the big reversal bar here. But here's stuck in its low, 1237.2, 1237.2. The red line was at 1236.8. That's only 4 ticks away from the red line. And in a number of 1,236 points, there's 12,360 ticks. So 4 ticks within 12,000. You can see that's like 0.001%. Absolutely extraordinary accuracy. What happened with the next day? What happened today? Look where this market closed. Closed today, 1234.4. There's the red line, 1234. These markets are tracking these Daniel code numbers within a handful of ticks. We actually allow 0.001. A number like 1200, we say we can have up to 1.2, 1.3, or 12 or 13 ticks. That's 1.2 points, 1.3 points variance. Most of the time, it's tracking these numbers to within a handful of ticks. Extraordinary. And you can see that target recognition, as we call it, is valid at the bar high low or on the close. Both of them are valid. 1234 was the number we were looking for today. The close, 1234.4. The big point about all of this is markets do not turn anywhere except at or very near to the Daniell code numbers, whatever other indicators you may have. If the high-low of the bar or the close is not at or very, very near a Daniell code number, the market will not turn. And if you don't have that crucial piece of information that you only get at the Daniell code, you're missing out on the biggest part of trading. Okay, let me move on. I've got a whole lot to talk to you about. This is a little comment that came up the last couple of weeks. What we've been doing with our Daniell code tutorials lately is we've been running with video tutorials, which lets you do them at home, and you have 4 2-hour sessions with me, and done by video and talking to each other. Go through the charts, do the teaching, record it all so you can go through it as often as you like, and then we have another large number of sessions where you start sim trading or paper trading, and we go through your trading with you, or I go through your trading with you, and we look at all your trades and see if there was a better way of doing it, whether you picked up the teaching, whether there are still areas there we need to work on, and so forth and so on. Now, 2 of our current video tutorial guys, they know who they are. Steve's up in Alaska, Mike's in the Midwest somewhere, have produced better than $30,000 net return in paper trading natural gas for the 2016 calendar year, using our exclusive continuous time signals. I don't talk much about time signals at these public webinars because they're one of the major parts of the package that I teach you at the tutorials. But this is extraordinary. The margin on natural gas is 2,860 at the moment. It fluctuates a bit during the year, but that's where it is now. And there's a mini gas contract with a margin of $700 odd. This is what they've achieved simply using the Daniell code time signals. Now, time is more important than price. Admittedly, paper trading has limitations, pretty substantial limitations. They don't reflect, nor am I suggesting they do reflect, real-time trading. They don't have slippages, they don't have lack of fills, all the normal things that happen in real-time trading. But they are a very serious indicator of the possibilities inherent in trading the Daniell code time signals. In other words, in this paper trading, I've asked these students, go through the whole of 2016, put into a spreadsheet every trade, where you entered, where you exited, what was your rule to get you in, what was your rule to get you out, how did you exit, were you stopped out, did you have a stop and reverse, did you have a new signal the other way? It's all set out on the spreadsheet. It's a lot of work, but this is how you learn to trade time. It's quite extraordinary. You can look at that on a percentage basis and it's ridiculous, isn't it? And anyway, it's the art of what's possible. So if you'd like to join our next video tutorial group to learn how to trade Daniell code time signals, contact me. Please email me, jneedham@thedaniellcode.com, and I look forward to having a discussion with you. You can do this one-on-one with me, and you can do it from the comfort of your own home pretty well at any time that suits both of us. So do let me know if you're interested in rising to the next challenge. It's a significant step up. Some of you will have seen this next page that I'm giving you, and this is this argument of execution in government. These were the points that Trump made in his address to Congress, and they're on the White House website. So one assumes that they've been vetted, proofed, fact-checked, everything else. And it's really interesting, not just because this is what's been happening in America, but this is what's happening to all of us all over the world. Similar things are happening in Australia, similar things, worse things have been happening in Europe. But we very rarely get the situation of full disclosure and truth from governments. And we only get that really when there's been a change in political direction and there's some real vehemence and feeling in it. Most politicians will try to cover up to some extent the sins of their predecessors, because these are not just sins of the previous political group, these are sins of the bureaucracy who've allowed this to happen and ruled over it. Remember, the politicians are not your masters, the bureaucracy are your masters. And these are the real swamp. These are the people deeply, deeply ingrained in government. They're rent seekers. They're extracting massive amounts of money from taxpayers, and politicians are beholden to their senior bureaucrats. And they don't like to say, we did this, because the people running the bureaucracies in America, all over the world, in fact, are the same people who were running it after the last government. It takes peculiar circumstances, this real war between Republicans and Democrats, or more between Trump and the rest of the world, before you're going to get these sorts of disclosures. And it's truly shocking. Truly shocking. And, you know, this is happening to all of us. The challenge of putting this economic plot back together is extremely complex, extremely difficult, and it's going to require huge amounts of goodwill from everyone involved. And that's what the world doesn't have at the moment. We've become more and more polarized, politics included. It's not. There's not much goodwill there, is there? Which makes me a little jaundiced about whether we're actually going to get all of these changes that the new administration's talking about. We're going to move on to the charts now, folks, but in the meantime, if you haven't already, you're welcome to have a free trial of everything at the Daniel Code. Excuse me, if you just go to the website, www.thedanielcode.com, click on the free trial link, register your username and password, and send the username to Terry at support@thedanielcode.com. He will turn on the website for you for 31 days free of charge. He will show you everything we have in the website, including our fourth seal forecasting. And he will also enable the Daniel Code library of studies for you that gives you additional studies that work on Trade Navigator. If you haven't got Trade Navigator, which is what I use for my charting and trading, Terry will be happy to arrange a free trial of Trade Navigator for you also. So please do take advantage of that. It's never too early to start getting it right. This is our compliance statement, folks, which I always like to show you. Trading futures and Forex is risky. If you don't know what you're doing, which applies to 99.99% of the world, you can lose a lot of money really, really fast. To those of you who are Daniel Code clients, you're not going to have that problem because you've got some idea about trading. And if you've done a Daniel Code tutorial, you are either or you are on your way to being a very seriously good trader. Okay, let's get rid of this and let's have a look at our major charts now. And let's bring it up. And here's the biggie. This is the S&P. This is the index. This is the S&P index. And you'll recall that I'll just have to crunch it in a bit more to find the number. This is the number here that we had, 2393, 2400, I said. And look what, this is the last bar that finished here. This bar ended on Wednesday, March the 1st. That was yesterday. Look what that high was, 2400.98. Pretty extraordinary, isn't it? And look where the close was, 2395, about 2 points away from the actual 23.93.5 target. Okay, so we've got there, and as you can see, we've got there a whole lot quicker. We weren't really due to get there. Oh, that's our next line. I think that's about right. And what have we got to look forward to next? 2508, then 2669. Does this mean this is the high? No, it is probably a high. And it's a real simple thing, this. I think I told you this is not the Daniel Code blue lines, which are far more accurate. All this is is it's taken the first move out of this big trade. Look how accurately this thing's run up, this Daniel Code trading channel. It's run all the way up from the lows in March 2009, and it's had a close outside 2 standard deviations once. And this was back, I think, in February. Here it is here. The chart moves a bit as it moves on. I think it was February the 10th. That's the only week it's closed outside 2 standard deviations from the mean. Look where it is back now, trying to recover 1 standard deviation from the mean. That's absolutely normal behavior. But to get to these numbers, all I've done is taken the first move out, and there's at least a couple of alternatives of that, and we've extended them as equality or a function of. In other words, all markets are fractals. All markets are fractal based. That is, all ranges are a fractal or a function of a previous range. That sounds simple, but knowing which one's a little bit more complicated. But this is the simple basis. This is the Enid Blyton's forecasting for beginners, pages 1 to 7, there is nothing absolute about this. There is nothing in here yet to say that is the high. But my feeling of what's happening in this argument I'm trying to make of peak stupidity, I am seeing so much that just doesn't have a rational backing. You look at these equities valuations. Are these stocks worth this? Well, if everything goes perfectly, yes, perhaps. What are the chances of everything going perfectly? Nil, none, zero, zilch, not going to happen. Okay? What did Prince say at the end of the 2007 boom? The music's playing and you got to keep dancing. Well, all the hedgies were doing that. Remember, Lehman and Co. And the theory was that they could find a chair to sit on quickly enough when the music stopped, and they couldn't. Because all sorts of things happen when markets reverse dramatically. Liquidity dries up, access to markets is reduced, counterparty risk is magnified to an extent that they're not able to comply, and they can't find a seat. That's why you're safer, much safer, trading futures. People often ask me, do I trade stocks? Well, my father was a great one for trading stocks. God bless him. He's been dead a long time now. And when he was alive, I used to trade stocks with him. It wasn't until I learned about futures that I realized how foolish I've been. Stocks are incredibly dangerous. Incredibly dangerous. Futures, traded properly, are relatively safe. Certainly much, much safer than stocks. Much safer. And much safer than ETFs, which have got some serious execution problems. So, there's the counter view for you, but it's a view of someone who's been trading for over 30 years. I am not brave enough to trade stocks. I like things that are orderly, predictable, and that for me is futures and spot forex. You have to excuse me with that phone ringing, folks. It'll be answered, I'm sure. There we are. See, the system works. Okay, let's move on. I had a couple of other charts I wanted to show you. So we're right at target now. I think I wanted to show you that. Here's the same target. This is the S&P, the 12-day chart. And we also have our major trend chart, SP trend. This is the 24-day chart, folks. Each one of these bars is 24 trading days. In other words, that's sort of a Daniel Code month. Now, have a look. This 177, this is a Daniel Code time cycle. It's a major time cycle on our longest term chart. It expired on March the 1st. It's complete. These time cycles are accurate to plus or minus 1 period. So that could be a completed high. We won't know. We don't have foresight, much as others like to pretend they know what's going to happen. All we know are the probabilities, but our signals are so good that we execute on those probabilities. So what you need to be looking for now is the Daniel Code trade signals to get you short. And you need to be pulled into this trade. If this is an interim top, there is nothing to say that it's top leading to anything catastrophic. You could very easily get a 50% correction here if it's going to be a biggie. And that's going to take you down to, I don't know, somewhere around here, 1600 odd. You could get a bigger correction. There's nothing in our book of probabilities that tells us what we're going to get, other than that we have some key points, and we're at one now where those probabilities of reversal rise. The other alternate is that the stupidity goes to the next level. You can see the next number on this particular chart after 23.93, which has now been surpassed, is 24.82. So that's probably the next number to keep your eye on. I'm excited because I love chaos, and I think there's a real chance for chaos now. Don't be frightened by it. Make sure, if you own stocks, make sure you're hedged. Okay? You won't be able to get hedged once the market starts going down. Get yourselves hedged now, at least partially, if not substantially. There is some reasonable probability that this is the high of this bull market. The other probability is it just goes higher. Talk to your broker about a neutral hedge, but it's certainly time to have your antennae up and be aware that going the other way is definitely a probability. So I hope I've alerted you to that, folks. You should be looking for your partner to go home with, ordering last drinks, and trying to remember where you parked your car if you're capable of driving it, and if not, find a friend. And that's about it for today. I wanted to show you that. I had one other thing I wanted to show you. I want to show you the difference between good trading markets and bad trading markets. This is the S&P E-mini contract. This red box is running from December the 12th until January the 23rd. Have a look what's happening when markets go sideways. There are no closes outside this tiny range. I mean, you could be pedantic and push this little line here up a bit higher if you wanted to, and you'll have two closes outside. But this little run down at the low here and this push up in here, they're the only two occasions. Sorry, here's one more over here, three in this whole period, which is running from December the 12th to January 23rd. For the whole month, there were three occasions of a profitable exit. Okay, when markets are going sideways, when the closes are not moving outside the operating range, they are bad trading markets, really bad. This up here, of course, is boom time. This is what investors love, not so good for traders. I can show you, that's what I call a bad trading market, and even this big run up here, parts of it are good. You get the big run, but then you keep getting hit with a 1 bar counter trend. Let's have a look at the other market I want to show you, which I think was natural gas. Here's natural gas. Here's coffee. This is even better. Have a look. Up, down, up, down, up, down. Markets that have considerable movement in the horizontal plane, that is, they are moving either up or down, are good trading markets. Markets that have not got this vertical movement are not good trading markets. So I know that most of you lock onto certain markets you like, and you stick there and you stick there. Don't do that. Have a range of markets, and when you see markets starting to consolidate and go sideways, leave them. If you miss the breakout, who cares? You can trade another 3 or 4 or 5 markets. You can be making money while that market's consolidating. And that's what I have as a thought for you today. So, folks, continue to be very skeptical and be prepared. Don't be frightened to take sell-side signals. I think we need a decent correction. If the build in optimism doesn't happen, then you're going to see some massive and maybe very exciting corrections. Thank you for being with us. Donnie Maydell up there in Canada, my friend, thank you. Great to have had you with us, and glad you're all with us. Look forward to seeing you at the same time in a fortnight. I know that word fortnights are being taken out of the Oxford Dictionary. It means 14 nights. It's an old English expression. It's one I was brought up with. See you in a fortnight. It was always a well-known expression, but I know that Americans in particular haven't heard that. So a fortnight is 2 weeks, and that's when I see you. Hey, Chris, nice to have you with us, mate. How have you been? He's a great bloke, Chris Wallace. I met him in LA. He's a very keen trading guy. Nice to hear from you, Chris. Let's stay in touch. All right, folks, thanks for being with us here. Terrific to have you. And I look forward to seeing you at the next webinar. If there's anything dramatic happens in these markets, we'll put on a webinar straight away and make sure you know about it. Thanks for being with us. Bye-bye.